Alright, I've been asked to do a bit of a follow-on video on Bitcoin because I did some predictions. I was having a bit of fun in the last video. Started making some predictions based on patterns that have stood the test of time in many, many markets, and how fascinating it was to see how these patterns were respected once we saw that fear kick in on the Bitcoin. So I thought I'd do a bit of a follow-up because I did mention in the last video that I was predicting a further move down, and it actually did. And people were saying, "Come on, keep this going and do another prediction." And I thought I'd just follow on because since that video, we've had a couple of patterns in the market that have stood the test of time and been respected in many, many other markets. And I'm going to share them with you and why I think that Bitcoin has a very high probability of pushing down still to around that 7,000 mark. Okay, again, so I'm going to walk you through this now. So the first pattern I'm going to share with you is a ratio pattern. Anyone familiar with ratio patterns using Fibonacci ratios? There was a guy named H.M. Gartley, and he discovered that when a certain sequence of ratios were met in the market, retracements and extensions, there was a reaction in the market that he was able to capitalize from. And because this was mentioned on page 222 of his book, it's commonly known as the 222 Gartley pattern. And what we saw recently on Bitcoin was this pattern form here, which is a Gartley pattern. And what a Gartley pattern provides a high probability of is a reaction at the completion point. So this decompletion point, we're likely to see the market rally in a bullish pattern and drop in a bearish pattern. So you can see that we've actually respected this Gartley pattern. Typically, targets for this type of pattern are sitting at the 382 retracement, and you can see, look at that, right? We've just pushed up and hit that 382. But this leads us on to the next pattern, which I really, really want to, because I know a couple of people have done some analysis on the Gartley pattern. What I want to share with you is why I think that we're likely to push down even further. And what I'm looking at is following the break of this head and shoulders, which I went through in the last video, we started to push down. We had some nice support level. We broke through that support level, and now we're pushing back up into that zone, which should become resistance. Okay, now many, many markets, this is the same pattern that's respected time and time again. And as we push up into that level, we're looking for a signal that the market is likely to roll over. Okay, so we're likely to push down. Now, as you can see here, we've pushed right back up into this previous support level, which should become resistance. And as I just mentioned, we brought on the Fib retracement tool, and it just so happened that there is a 382 ratio, which is one of the major retracement ratios, at 11,157. That is right at that level there. You can see right here we've respected that level. But the real clue that I want to show you is the candlestick pattern. Okay, anyone familiar with candlesticks? There's a guy called Steve Neeson who brought the candlesticks over to the Western world. He took the bar chart, created candlesticks, and he was very, very profitable trading certain patterns, and this is going to be one of them. So as we approach this previous structure support level, we know that it should become resistance. So what we want to do is take a deeper look at what's happening here in the market. And this is what we call a reversal pattern. And what it is it's typically a story of a bullish momentum, okay? And then the bulls trying to push up and getting rejected by the bears, and then we're looking for the third candle which breaks and closes below the low of the high test candle here, the second candle in the sequence. Once we get a break and close below, and by the way, the stronger the momentum on the close, so that the lower we close below the low of the middle candle, the stronger the signal. Okay, so you can see we've pushed right up. The bears have been slapped in the face here. We've got this high test candle wick, very, very nice open and close in the lower 20% of the body, 30% of the body, which signifies bearish pressure anyway. And then it's followed by this beautiful reversal signal, this lower low, lower close. And what this means is there's a very, very high probability of continuing down. And I'm making a prediction here. I'm not trading this, but I'm making a prediction that we're going to retest 69.08. So that is my analysis on Bitcoin. I know many of you are enjoying watching this, so I thought I'd follow up, show you how some of these patterns, not only one, not only two, but three patterns that I've shown you that have been respected, the head and shoulders, the Gartley pattern, and now we've got this 3-bar reversal which we're expecting and pushed down. So it'd be very interesting to see how this goes. But what my advice would be is, why worry about trying to trade a new market like this? You know, these patterns that I'm showing you are what I use to generate an income every single day. You can earn lots of money trading these patterns in the Forex market. So why bother with a young market like this when you can go and trade this on markets that have, you know, been around for years and years and years, and these patterns have stood the test of time, and you've got all the historic data to prove it. So if you are interested in that, go over to Tier 1 and you're going to learn every single one of these patterns. So I look forward to seeing you in there, and until next time, take care, good luck in your trading, and I'll see you then.